Let's pray. Father, we thank you for this day. We thank you for the energy and strength you have granted us. We are about to learn. We pray that may your spirit be with us. May we learn the rightful things so that everything I will learn at the end of the day, may we be able to remember and may it be an asset unto us. Amen. Good. So we are done praying. So let's begin. So please, when we talk about local government basically is referring to MMDAs, okay? Metropolitan, Municipal, and District Assemblies. That's local government. So any question you meet that is on municipal, is on metropolitan, is on district assemblies, that is what? Local government. Simple, simple. So when you meet a question, okay, example, the trial balance relates to Accra Metropolitan. They know that this is a local government question. Okay. The question relates to what? Accra Metropolitan. Accra Municipal Assembly. The first one was Metropolitan. This one is Municipal Assembly. They know that this one is a what? Or you go and see Winneba District. Bando District. They know that these questions about what? Local what? Government. This questions about local what? Government. Simple like that. Simple like that. Do you get it? Perfect. So that's the first thing. We are done learning the first thing about local government. Okay. Now you come to the second one. Now, when we talk about local government, there are certain key features of local government. First of it is that what? The system is established under the Act. That's the 1992 Act. The functions, powers, and responsibilities are determined by the Act, of course. They are established to have a sound financial base with adequate and reliable resources. They are established to what? Have a sound financial base. Sound financial base with adequate and reliable resources. So please, how are they able to, how can they have, since they don't collect taxes, okay, since they don't collect taxes, how do the constitution or the act that establishes it wants you to have a sound financial base? How will it have a sound financial base since it is not powered to collect taxes? How will they have a sound financial base? That's where my focus is. How will a local government, a district assembly have a sound financial base since it does not collect taxes? Because if it does not collect taxes, how do you expect it to get money? There's means by which it can get money. The first one is that support from government. See, support from government. The government supports it. Support from government. And the second one is that what? It is empowered to collect revenue from within the district or from within the municipality or from within the metropolitan. It is empowered. Local governments are empowered. They have the right to collect revenue, but it's not tax revenue. And that's what we call the IGF, CIGF. That's what we call the IGF, internally generated fund. I believe you understand. So this is how they get a sound financial base. The government supports them, and also they are empowered to collect revenue from within the locality. So just know that government supports them. So when the government collects the taxes and what have you, the government gives them some. I believe you understand. The government gives them some in so many ways. And you go to that. Thank you very much. Good. Let's go. Revenues of MMDAs. What are the revenues of MMDAs? Or that is the local government. What are the revenues? We have decentralized transfer. Do you remember I told you that the government gives them revenue? The government gives them revenue. The government supports them. And when they receive this money, it is a revenue from what? The government. It's a revenue from the government. It's a revenue from the government. That the decentralized transfer. Decentralized means that the government collects the revenue and gives them their portion. But as I say, the government will collect the revenue and give them their what? Their portion. But as I say, decentralized and shares the revenue with them. Decentralized transfer. Decentralized transfer. Decentralized transfer. Decentralized transfer. Decentralized transfer. So how does the government give them the revenue? Sometimes it comes in a form of money. Common fund. The government will give them a portion of the tax, or sometimes the government will decide not to give them cash. But what the government will do is that he will pay the salary of all the local assembly members. You see, when the government pays salaries on their behalf, it's as if they have received the money. Or when the government does what? Build infrastructures for them, build facilities for them. It's as if the government has given them cash. And those of you who do not see that, yes, sometimes the government does these things directly. Directly, the government will come and build a hospital for them, build an assembly for them, build a school for them in that particular district. Sometimes the government will pay salary of their workers for them. All these things are seen as if government is giving them money. So they are all under decentralized transfer. So far as the aid is coming from the government, it is decentralized transfer. Unless it is a special grant. Unless it's a special grant for a special purpose. If it's not a special grant for a special purpose, government can give you some amount of money that take this money to do this special purpose. That money there, it is not decentralized transfer. But when the government says that, okay, fine, I have come and build, I'll pay your salary of your workers for you, I'll do this and that's what they are all decentralized transfer. So we have another one called IGF, internally generated fund. All the money that is raised within the assembly is called internally generated fund, IGF. All revenues raised within the assembly or district is called IGF. Raised from internal, from license, registration of certificates, when you go to them to register anything. I mean, all revenues raised from within. Okay, when you go to the market, they collect tolls, bungalows, they rent their bungalows. I mean, the non-tax revenues, at the district assembly level, we call it what? IGF. You see, during the central government, you see the non-tax revenues. At the IGF, at the local assembly level, it's called IGF. They have donations and grants, which is the same as grants that you know. Okay, when they receive sponsorship, they receive grants. I believe you understand it. All these things are what? Are the revenues. So the revenue of the government, the local government, is segmented into three phases. You have three key revenue sources. You have decentralized transfer. That is when the money is coming from the government or when the revenue is coming from the government to them. It's a revenue to them. They recognize it as a revenue when the government gives them revenue. And as a decentralized transfer can come in so many folds. We have IGF, that the revenue they raise from within, and you have donations and awards, grants, full stop. Let's go. So let's take them one after the other. So decentralized transfer, these are transfers to MMDAs as a result of legal mandate or policy requirement by force. That is what the law says. That you, the government, after collecting the revenue, you have to give the local assembly some. As a result of legal mandate by force, legally. So they have the legal right to collect it. Examples of these decentralized transfers are District Assemblies Common Fund. You remember the common fund. When you collect, you are supposed to contribute a percentage into their common funds. Grant in aid from the central government, such as direct development facility. You see, when a government come and develop a facility, like I was saying, builds up a facility and all those things. Any other revenue transfer from the central government. So far as the revenue is coming from the central government, which could be in the form of what? Subventions to compensation, pays compensation for your employees. All these things are recognized as what? As decentralized transfer. We go to IGF. Please, the IGF is internally generated fund. You have the license, you have the fees, you have the taxes, you have investment income, you have rate. All these things. Examples are what? Property, plant, and funeral rate, assembly share of stool land property, revenue plot, transfers from revenue, fees and fines, all these things. Dog license, extension hours, hotels, and you see, license for dog, license for hawkers, license for hotels, license for beer. When you go and take it from the assembly, they collect some money. It's not free. Market tools, lorry park tools, trading kiosk, court fines, restoration. All these things are revenue to the assembly. Sometimes you can go to court and the court will fine you that pay this amount of money to the assembly. The court will fine you, pay this amount of money to the assembly. When that money goes to the assembly, it becomes an IGF to the what? To the assembly, internal generated fund to the assembly. So you'll be seeing them at the various lorry stations. Then you ask yourself, are these women cry? Why are they always collecting money from drivers? You be seeing them at the various lorry stations. You be asking yourself, why are they always collecting money? Hmm? You see the market. The market, before they give you a place to sit and sell, if you want to sit at a place and sell at the market, you have to go and this one, how do you call it? Rent that particular shed. Okay, if you want a shed to sit under, you have to go and register it, and they give you a specific shed to sit under and trade. All these things are revenue to the what? They also receive rent. You see, rent from market stores, rent, renting the assembly's property. Some of the assembly, they have vehicles that they are renting. You can go and rent it. All these things are investment. See, investment, sometimes they invest their money and get interest on the investment. All these things, there are a lot of IGF. So when you get a note, read the what? The incomes that go to IGM. There are a lot of them. Okay. But the best way to know more examples is by solving more questions. The best way to know more examples is by solving more questions. Good. That is that. Then we go to the next one, donations and grants. For donations and grants, you already know it. When you receive something free of charge, it's not waste money. Sometimes it can be an asset, but you have to record it as if or as though you received money. As though you received money. So that is that. Got that? So if you remember very well, last time I told you that the format of financial statement of financial performance is the same for all the three. For central government, for local government, for covered entity. The format of financial statement preparation is the same. Is the same. State of financial performance is the same, with the exception of the revenue. It's only the revenue that changes. It's only the revenue that changes because local government cannot go and collect taxes. So I cannot say that the revenue of local government is direct tax and non-tax. Whereas waiting, local government, they do not take taxes. It's only the central government that takes what? Taxes. It's only the central government that takes what? Taxes. With the local government, their revenue sources are what? Decentralized transfer, IGF, and donations and grants. Agbena. Decentralized transfers, IGF, donations and grants. These are the total revenues of the what? The local government. These are the revenues of the local government. They are not mandated to take taxes. So you cannot use, but apart from that, the expenses is the same. The expenses is what? The same. Expenses is the same format. It's the same format you use for the expenses. So when you learn the expenses, you are done. Okay, good. This brings us to the end of today's topic. Any question? Please, if you have a question, can you unmute yourself and ask? Either than that, you are done with today's topic. If you understand what he just did, can you give me a reaction? Okay, some of you don't know what a reaction is. So please, basically, this is local government. Basically, local government. When I say financial statement, who said financial statement preparation is difficult? No, it's not difficult. Oh. That is it. We are done with local government financial statement. We are done with it. A real local government financial statement. That is it. It's that simple. Simple like that. Simple like that. Okay. So basically, I just said that what the local government, their revenue structure is different. You have the centralized transfer. That's transfer from the government. It could be in the form of common fund. It could be in the form of grants in aid. Grants in aid is when they come and develop a facility for you. They come and build a structure, do this and that for you. Or it could be in the form of what? They paying some of your compensation. They paying goods and services for you. The government can pay goods and services for you. All these things are what? Decentralized what? Transfer. They have IGF. When you see IGF revenue, you see it. Trust me. When you see IGF revenue, you see it. You have the next one called donation awards, grant, donation awards, grant, donation awards, grant. You know donation and grant. When you see it, you see it. When you see IGF, you see it. When you see decentralized transfer, you see Agbena, Agbena, Agbena. And these are the revenue for the what? So all these are examples of IGF, examples of internally generated fund, internal examples of decentralized transfer. Once a donation and grant, they didn't give any example because that one common sense. Receiving donation from anybody at all. Okay, good. The statement of financial performance, the revenue, you have decentralized transfer, IDF, donations and grants. Here we. So we have an example. So example, please, let's concentrate. Look on the board. Please look on the board. Now that we are done, we should be able to test ourselves to know whether indeed we understand. True of us. True. Anyways, God bless all those that have sent me data. Mr. Naftalin, God bless you for your willingness to send me data. Yes, some of you are very kind, and I mean, some of these things surprises me. Okay, good. So please, let's take an example. Also, please, those of you who wants to join our other interventions, okay, this is just for PSA. This group is just for PSA. We have other interventions that are coming up very soon. So please, you can join our main page. That's where you have access to all other information relating to other interventions. Okay, thank you very much. Okay, good. So let's take an example. Look at this one. Established post salaries. You and I know that the trial balance is made up of what? Debit and what? Credit. True of us? True. Trial balance is made up of debit and credit. Okay. So when you see all transactions at the debit side is what? I told you the other day, all transactions at the debit side is expenses. All transactions at the credit side is what? Revenue. I told you the other day, right? Good. That is statement of financial performance. Okay. So when you come to the debit side, expenses. When you come to the credit side, revenue. So you see this one, I'm seeing established post salaries. Assuming it was at the debit side, this would have gone to compensation. If this transaction was at the debit side, it means it's an expense. So it would have gone to compensation. True of us, true. But here I am seeing it at the what? At the credit side. Hence, it means this is what? Decentralized transfer. Which means the government is paying compensation for me. The government is paying established post salaries for me. Hence, it's a revenue for me. So you go to decentralized transfer. See this one. District Assembly Common Fund. Decentralized transfer. District Development Facility. Decentralized transfer. See this one. Special Sanitation Grant. Special Sanitation Grant. Decentralized transfer. All these things are coming from the government. They are all coming from the government. They are all coming from the government. When someone say special sanitation grant from what? Government. Once it is coming from the government, brofu. If you don't respect, you don't respect. I said if the thing is coming from the government, it is what? Decentralized transfer. Once it's coming from the government, it's not the government's own money. The government is transferring it from the consolidated fund. And it is my responsibility to collect it. So when he brings it from the government, if friend decentralized transfer, he is then decentralizing it. Okay, good. See this one. Entertainment license. Where will it go to? IGF. Entertainment license. You when somebody wants license, the person goes to the assembly. Vehicle license. All licenses IGF. Market tools IGF. Market store fees IGF. Lorry park fees IGF. Advertisement IGF. Fines and fees IGF. Basic rate IGF. Property rate. Hey, it's okay. I will not continue again. Look at this one. Motor vehicle. I've already been telling you that motor vehicle, the debit side is the cost. And the credit side is the accumulated depreciation. This one is the cost. This one is the accumulated depreciation. Right? I believe I have Madam Monica here. Madam Monica, Anna, I believe you are here. Yes. So this one is the cost. This one is what? accumulated depreciation. That's when you go to the fixed asset. Fixed asset. Don't send this one to IGF board down. No, this is accumulated depreciation because it's accumulating to a fixed asset. Accumulated depreciation. Depreciation that has occurred over so many years. If you are here and you say that you don't know how to prepare PPE schedule, I don't understand you. All what you have to do is that write the cost 114,000, subtract this one, accumulated depreciation from it. Asa. Then find the depreciation for the year. If there's any addition, you add it. If there's no addition for the year, don't add anything. Agbina. So nothing difficult there, right? Perfect. Then go to payable liabilities. Like, please, you are done. You understand? So this is how you do it. This is how you do it. Let's go to another question. See this question too. See, please, this one. Share of District Assembly Common Fund. Share of District Assembly Common Fund is what? Who can tell me? It is same as Common Fund. So where does it go to?
Decentralized transfer.
Decentralized transfer. Now look at this one. Share of stool land revenue. Please, the share of stool land revenue, some will treat it as decentralized transfer. Others will treat it as IGF. What does it mean? You see, stool land revenue is what? Revenue gotten from the locality. Okay.
Yeah.
Please, the revenue from the locality is like royalty. Stool land revenue is like royalty. Okay. What happens is that usually they pay to the central government. The stool land revenue, usually they pay to the central government. So let's say they have identified a petroleum in your society or in your community and they want to mine it. Petroleum in your community, they want to mine it. They first of all have to go and pay the needful. They have to do the needful. They have to go and pay to the central government. They don't pay to you, the chief, or the MC. No, they pay to the central government. The central government will give you your share. So it is also from the central government. So please, some will treat it as IGF, which is not wrong. And some will treat it as decentralized transfer. When you treat it as IGF, it means that they pay the stool land property, the stool land revenue. No, they paid it to the district assembly. They paid it at the district assembly level. That is, they paid to the MC or a DC. That's who they pay it to. They didn't pay to the central government. But please, for ICA purposes, for ICA purposes, anytime you see stool land revenue, treat it as what? Decentralized transfer. Anytime you see stool land revenue, treat it as what? Decentralized transfer. For ICA purposes. When you see stool land revenue, send it to decentralized transfer. Don't send it to IGF. For ICA purposes. But in future, if you want to argue your point, you want to prove people that you know, yes, you can say it is IGF. But then for ICA purposes, send it to decentralized transfer. I'm done with that. Now, seeded revenue from GRA. GRA is decentralized transfer. GRA is the government level. Okay. When they share the revenue from GRA, when you get your portion, it is decentralized transfer. Basic rate, IGF. Property rate, IGF. Market tools, IGF. Market stores, IGF. Advertisement, IGF. Licensed vehicles, IGF. Hawkers license, IGF. Enten license, IGF. Face pay, IGF. IGF. You understand? This is motor vehicles. So this is accumulated depreciation, cost, accumulated depreciation, cost, accumulated depreciation, cost, accumulated depreciation. Motor vehicle, that's how you know it, right? Okay, good, we are done. Asa, who says IC is difficult? Nothing difficult here. Can you see that? Nothing difficult. For the debit side there, the same thing we did the other day. Nothing has changed. We say whatever is going to compensation, send it there. Whatever is going to goods and services, send it there. Yeah. Let's go to another question. In fact, let's solve this question. So please, this is going to be your assignment. This one. Classify these expenses under revenue and expenses. After I finish, I think we have even done part of it. After I finish, you do this one. Okay. Now, office consumable in respect. So please do this one. It's a very nice question, which is like the one we solved the other day. Nothing different. The one we solved from the central government. The footnote in there is the same thing. The footnote is the same thing. You understand it? The footnote is the same thing. So they just play around it. So please solve that one. Okay, this is an assignment. Kindly solve it. But we will solve everything before you go and write the exams. But it's your assignment. Question 2 is your assignment. Do it. Let's do question 3 together. And after that, we close. Question 3. Let's do question 3 together. Any questions so far? Any questions so far, please? Yes, I can see a hand up. Home alone. Home alone. Oh, around here.
Yeah,
Home.
yeah, yeah. Good morning.
Good morning.
Yeah, please, the decentralized transfer, no. You see, both of the one that you just said, the stolen this thing, no. Both of them for that revenue. But so if you place it under IGF or under decentralized this thing, yes, the decentralized transfer, it will still balance. Or because
Oh, it
since
will still balance. They are revenue.
is it?
Forget the balancing. Forget the balancing. Hey, Mebu, don't be talking about balancing, man.
Okay.
Nah,
So.
I don't want to hear that word. If you put that in mind, that is where it will disturb you. Don't try to balance it. Try to get as many ticks as you can. Do you understand it?
Okay, no
But
problem.
then it will still balance because they are all revenue. Okay.
Okay, sir. Thank you very
I
much.
just made a statement that for ICA purposes, always put it under what?
This he said we should always put under decentralized transfer.
Perfect. For ICA purposes, put it under decentralized transfer. Okay. For ICA purposes, always put it under what? Decentralized transfer.
Okay, sir. Thank you very much.
Perfect. For ICA purposes, always put it under decentralized transfer. Agbena, you, now, no, from this time go, you should be able to strategize yourself to get as many points as you can. You should be able to strategize yourself to get as many points as you can. Okay, that is exam. Hey, please, ICA exams, it's about speed. It's about speed. If you go there and you go and do like this thing, I don't understand. When you go there, first thing, read the preamble. When you read the preamble and you realize that this question is about municipal assembly. Once you see it is about municipal assembly, first thing to tell you that this question is about what? Local government. Once it's about local government, go straight forward and start. Don't go and read the footnote and be shaking. Hey, I can't do it. If you can't do it, leave that footnote. If you leave that footnote, you are not failing. You get it? If you leave that particular footnote, you are not failing. It's not about balancing it. I say it's not about balancing it. It's about passing rightful entries. It's about passing rightful entries and finishing. Just finish. What do you get a lot of text correct. So why do you have to be panicking? Say, Stephen, if you give me this question in examination condition, I'll finish it for you, but I'll not balance it. Because that's not where my mind is. My mind is not to balance it. My mind is to finish within 45 minutes and move to the next question. This is just 20 marks. I'll not come and kill myself on 20 marks. If I learn PPP, my 10 marks is secured. If I learn procurement, my 10 marks is secured. When I learn basis of accounting, my 10 marks is secured. Why should I come and kill myself here? If I learn budgeting, if I learn introduction to PSA, my 50 marks, my 50 marks is secured. If I learn PEFA, my favorite topic, my 10 marks is secured. Why should I come and kill myself here? So when you get here, try as much as possible to finish within 45 minutes by doing the normal thing. Because if you go through the questions from beginning of financial statement preparation until now, you realize that the footnote, if you solve all the questions and all the footnotes, and you go there, you don't meet any related footnote, come and change my name. Footnote are related. Brand new footnote that you've not seen before in the world. Come and change my name. You see related footnotes. You saw the lazy. That will say that I couldn't do it. You are not expected to balance it. You're expected to finish it. Bear in mind, you're not expected to balance it. You're expected to finish it. So going there to finish it, trust me, you should be able to finish it. Because before you enter, I trust you should solve plenty questions. I trust you should solve plenty questions. So if you close your eyes, you know where this transaction is going. Unless you don't solve plenty questions, that's why you find yourself wanting. You go and see district development facility. Then you be shaking. District, you don't know where district development facility is going. Then what are you doing in examination room? Because this thing I told you that you should be learning. Okay, good. So quickly, this is a question 3. Okay, local government. So let's quickly do a solution. This my answer board. So Nsuta appear Chrome. Nsuta appear Chrome Municipal Assembly is correct. Let me write it that way instead. Someone will say, why are you worrying yourself to write this thing? Please. Municipal Assembly, you should write it well. I've written Munica. You should write the municipal. I don't have time. Okay, good. So someone will say, why are you worrying yourself? Hey, who told you I'm worrying myself? This thing I've written on it to score me points. It is financial performance for the year end 31st December. Yeah, 2021. So quickly write the revenue. So revenue, we have decentralized transfer. We have IGF. Don't write IGF. You should write everything. Internally generated fund. Go to expenses for total revenue. Some also say expenditure is the same thing. Don't go and kill yourself there. You have compensation. Do you remember? You have goods and what services. We have public interest. We have compensation, no consumption. Consumption face capital. Those of you who don't understand this, go and join the Telegram page. It's on the Telegram page. Last week's lecture. Please, what else? Grant. As an expenditure grant. How many do you have? 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so you are done. These are the expenses. Okay, good. This brings us to the end. To write total expenses. Good. They have surplus. Dash deficit. Anyone that we get. Total expenditure will be put in here. Okay, good. So we go to the next one. Okay, good. So as usual, you just write non-current assets. Lease space, right? Current asset. Don't write anything there, just lease space. Lease space. If this is stop work, you write in this heading script, you get some small marks. Right. Current liability. Lease space. Right. Non-current liability. Divide the book. Lease space. Accumulated fund. Then the surplus or deficit for 2021. The 2021, the profit, surplus or deficit you make here. The surplus or deficit you make here. That's what you transfer what? Here. I told you. That's what you transfer here. You bring here. Assign away. So you come here. This is the note to account. Into workings. The same as the workings, huh? Note to account is the same as working. So if the question asks you prepare note to account, it simply means do the workings. Asa. One. As usual. This financial statement is prepared using accrual basis of accounting and is in line with IPSAS accounting standard. 2. The consumption of fixed capital is on a straight line and the useful life of the assets are as follows. So please just list the useful life of the asset. But the question, these are the assets. So motor vehicles, 10 years. Furniture and fitting, 5 years. Building, 50 years. FNF, venture fit in 5 years. Building, 50 years. Let me change the color of my pen. So go to the third one. So the third one, that's where you start, right? Please, all these things within 3 seconds. So all these things within 3 seconds. Don't waste time. It's just formality. Perfect. So now let's go. So we start with the revenue, decentralized transfer. Four, IGF. Please, like IGF Dawson. They be IGF Dawson always. IGF Dawson. So please, when you write IGF, don't write another transaction immediately after it. If not, you cancel whatever you've written down there. So leave enough space for IGF. Use of goods and services. So it's always plenty. Use of goods and services is always plenty. That one to leave enough space under it. Goods and services, use of goods and services, always plenty. So leave enough space under it. I believe I'm making sense. Okay, good. So please leave enough space under it. Perfect. Anyways, the Zoom can take only 100 people. So anybody that comes after the 100th person will not have space. So anytime, please do all to join early. We've not expanded it. Okay, decentralized transfer, IGF 4. Even though my PSA class, I have over 100 students. I know definitely it's not all of them that will join. Students will always be students. So some prefer watching recorded video. They'll never join a live class. Okay, good. So decentralized transfer, IGF. Then we have the last one, which is government grant. I'll not write it here. If I write it here, I'll cancel it. I will leave enough space. They be IGF there. I don't know why. They be IGF also. Okay, good. 5. So we have donation and grants. Okay, good. We are done. So this is the revenue element. Let's go to the expenditure element. I'll not write a CCO. No. If I write it, I'll cancel it later because IGF is always plenty. So I write compensation 6. Compensation. Compensation of employees. I don't have time. Just write compensation. You are good. Use of goods. Let me see if the space is okay. Nah, let me bring it down. Let me leave that space. Use of goods to Dawson. Okay, use of goods to so Dawson. So that one to leave in that space. The book is not for you. 8. What else do I have there? I think I have other expenses. Okay, public interest. You let me leave them. As and when they come, I'll create it. For now, let me just deal with this. Okay, so let me start the work. So there are so many ways of doing it. You can indicate it on it like this. When you finish, you go and write it there. You go and post it. Or when you cancel, you post. You cancel, you post. You cancel, you post. You cancel, you post. Or you can just indicate it. So when you go there, just be writing them. Whatever means that is convenient to you, use it. For me, because I'm using a shared board. I would like to write it beside it. When I finish, I go and post. Is that okay with us? So kindly mute yourselves. Let's do this together. Or you listen. Don't talk. Let me do it alone so that you don't disturb the whole class. So let's go. District development facility. Common sense. It is what? Decentralized transfer. See your development facility. It's the government did the development facility for you. They rotate questions. So if you are here and you are not learning, you are not solving past questions. They rotate questions. Papa, look at this one. Special sanitation grant. Look at this one. DDF. Okay, it is in the previous slide. It's on the previous slide. You realize that it's the same thing that they brought, the same thing. Okay, so this one, sanitation grant from government. This is what qualifies it. From government qualifies it. We have share of common fund. Share of common fund. We have property rates. It's on the credit side, though. This is the credit side, revenue. All these things are going to revenue. It's either revenue and it's made up of revenue and what? Liabilities and accumulated fund. So if it's no revenue, then it is a liability. Leave it. You send to balance sheet. If it's either revenue or it is a liability or it is accumulated fund. Accumulated fund is they bring only one pool. So it's either a revenue or a liability. If it's no revenue, then send it to accumulated fund. Send it to balance sheet. But that's what I say. So it's either it's a revenue or it's a balance sheet item. Property rate IGF. Funeral rate IGF. Donation. CO, donation is donation and grant. Donation and grant. Contract retention is a liability. Why is it a liability? Contract retention. You see, when somebody undertakes a contract for you, or a contractor does a work for you, okay, you don't have to pay the contractor the full amount. If the contractor is supposed to take 100 million, pay the contractor all the 100 million, but then retain 5%. Retain 5%. You don't give all the 100 million to a contractor. Give the contractor 95 million and you have to retain 5%. It's stipulated in a contract. Sometimes you have to retain 10% of the contract sum. Why are you retaining some of the amount? You are retaining 10% and 5% because in case you pay him everything and there's something wrong with the contract, he may not come back to repair it for you. So I'm retaining that amount so that in case there's any defect on a contract, you use that retention or the amount retained to do it. But what I say, sometimes in the contract terms, you can retain it for 5 years. After 5 years, if you don't get any issue with the contract, the contractor can come for his money. Sometimes you retain it forever so that you use that amount to do with maintenance for a number of years. So that's the retention money. Some of the contract has a retention clause. So the retention clause, in case there's any defect on the contract, you use the retained money to repair it. So you see, the government will be holding this retention money for the contractor. If there's nothing wrong, you pay it to the contractor. If there's something wrong, you use it to dot. So the money is not for the government, it's for the contractor. But you are just retaining it, you are just holding it. So this is a liability. Pajatas here. So this is a liability. Market tools, IGF. Court fines, IGF. Marriage and divorce registration, IGF. Hawkers license. Market stores, IGF. Market stores rent. Bungalow rent. Market stores rent, IGF. Bungalow rent, IGF. Promotion and advertisement, IGF. You remember I saw this in somewhere. Promotion and advertisement. So it means the more you solve questions, the more you become familiar with the transactions. It's not a magic. It's not a magic. You have to solve more questions to know them. Perfect. This one is what? Withholding tax. When you withhold tax, the tax does not belong to you. It belongs to the government. So therefore, if a local assembly withhold tax, it's going to give it to the government at the end of the year. So this one, you are just holding the money. It's not for you. So this one too is a liability. Okay, good. Interest. Please, interest. You see, we have two interests. One becomes IGF, internal generated fund, and one becomes public debt interest. So make catch here. Interest on loan. Interest on loan. There are two, 1 and 2. 1 and 2. Interest on loan, 1 and 2. They are telling you that one is a financial asset. You see, they're telling that one of them is a financial, of course, this is a financial asset. Please, interest on loan. Interest on loan. Interest on loan. There are two. One is IGF, and one becomes a what? An expense. That is the public debt interest. Can you see that? So this one is the what? It's IGF. What I say? You remember we have public debt interest. And if you make interest on loan, it is an internally generated fund. So this is what IGF. Motor vehicles, forget it. Because as I told you, this is the cost. This is the accumulated fund, cost, accumulated expense, cost, accumulated depreciation, sorry. Work in progress. Loans to staff, payables, long-term loans, accumulated fund. Please, Mary, I'm done with all the revenues. All the rest are what? Balance sheet items. So quickly, let's go and post it. We don't have time. You don't have time. So just come and post it. Any amount you post correctly, you've gotten a mark. Any amount you post correctly, you've got a mark. So quickly, let's do it. DDF. Do you remember?
I have a question.
Ask now your question, madam.
Please, the promotions and advertisements, can you please explain it to me?
Oh, who says sometimes no, these local assemblies, they have this van that if you want to do advert, you tell them they will wake up at dawn and put a speaker or this town crier on their van and they'll be advertising for you. Or if you've not encountered some before.
I have. It makes sense now. Thank you.
Or sometimes it can come in so many ways, okay? Sometimes in the various markets, they have town crier at the various markets that if you want them to promote something for you, they'll promote it for you free of charge. Or sometimes at a small rate. Sometimes a small rate, and that small rate becomes an internally generated fund. Do you understand it? Sometimes they can even allow you to put your advertisement board in their society. Yes. If you want to mount an advertisement screen in the community or that particular locality, you have to go and see them for them to give you approval. All these things, they take small money. You don't agree?
Yes, I understand.
You are welcome. Just a John proper tuition provider. Okay, let's continue. So please quickly, let's go. Okay. So we have the decentralized transfer. So the decentralized transfer, you have, please quickly, I don't know why the important thing is any amount you write correctly, you've gotten a tick. Remember, you are interested in the tick. It's the tick that makes the marks and not the balancing. So let's go. Today, I'll not balance it for you. You have to go and balance it yourself. Okay, let's go quickly. DDF. I saw DDF. Don't ask me where am I getting it from. Any DDF. 58. So I'll post all of them because I know what is going to. I know I'll write all this first. Then I'll write all this. You understand it? I know what is going to where. So quickly, because of time, let's quickly. Last week we closed so late and I wouldn't like that to happen again. Hey, I left something out.
Donation. Yeah.
No. All figures. All amounts are in. All amounts are in Ghana 3 zeros. Can you see that? It means that I would not be writing Ghana cedis. You, the examiner, when you see any amount be, it means it is in Ghana cedis and 3 zeros. If I don't write this thing, it means that I have to writing it. Oh, and I will not have the time to be writing it everywhere. So I've said that all amounts are in Ghana cedis and 3 zeros. So when you see it, know that they are all in Ghana cedis and 3 zeros. You cannot say that I'm wrong by not bringing it. I've already told you. And the one who said donation, please donation. Wow. Donations and grants. Who's the
Yeah, but at the revenue side, the financial performance, we don't have it there.
Okay. Bajenie, donation and grants.
Thank you.
You're welcome. So quickly, okay.
Yes, Stephen Wongata.
When examination pressure comes like that, you don't talk. Just be writing. I told you today I'm coming to my figures because of what you guys did the other day. Simple add for me. I'll cry and cry and cry. Nobody will mind me. Please, the focus should be on the figures. It shouldn't be on the writings. Do you understand it? It shouldn't be on this thing. So don't waste time and write everything. Okay. Remember, you're working within time. Once the figure is correct, you get the marks. So hawker's license. I just write hawker's license.
Sir, please, can you add these figures on the face of the financial performance?
Direct. Please,
Yes.
direct. You want to send it there straight?
Yes.
You can, but
Hey, like you there, you have to come back again. No, no, you can't do that. Okay. You have to show it as workings like I've done. This is the easiest you can prepare financial statements. If you do any other thing, you will not get scores. If you do that, you my financial statement, you get it. You can't send that straight. You have to show it as working so that you get marks for the working and you get marks for transferring the final answer. Okay, good. I'm done. You see the way the thing is. But it's always plenty. IGF. If you don't leave plenty space, you have to cancel whatever you did. You see why I cancel the use of goods and services. I'm not even done. No, don't close it. Okay, let's go through the footnote. You may adjust it. So usually you don't close it. Perfect. So we go to the next one, which is donation and grant. Donation and grant, donation and grant. Yeah, donation and grant. There was a donation. I think you are done. Okay, this is being suspended. So now let's continue. We are done with the debit, the credit side. That's the revenue. So we come to the what? So anyone you write BR, cancel it. Why do you have to cancel it? You have to cancel it to know the ones you have posted. If not, you see this one, I've not posted it, so it will be there. It will be outstanding there. If you don't cancel it, you think you have posted everything, or you don't know the ones you have posted, and you have to be reading all over again to find out the ones you've not posted. When you cancel, you know that you've posted this, and you are not going back to that one again. So the ones you've not posted, they are all going to payables, or they are all going to liability. They are all going to liability, whether current liability or non-current liability. They are all going to liability, whether current or non-current. You determine it. Okay, good. Let's go. Non-established post compensation, right? So this is going to compensate. No, if you are working, I know you not do it as like this because this is a screen. If I'm working, if I cancel, then I post. I cancel, then I post. That's how I do it. But I don't know about you, so you choose the best way. So this is going to compensation. This is commission to revenue collectors. So when you give a commission to revenue collectors, this one too is going to use of what? Goods. It's not way related. Printing, use of goods. Goods and service. Goods and service. Conference, goods and it's the same thing. You remember the same conference you saw? See, telecommunication costs, goods and service. Repair, goods and service. Town hall meeting, goods and services. The cost involved in town hall meeting. Special audit, goods and service. Travel, goods and service. This one to does man, goods and services also does man. Huh? See this one, revenue receivable. Receivable is not goods and services. It is what? An asset. Remember, debit side, no, we have expense and asset. Asa. If it's not an expense, it is an asset. Remember that. That's why when I want expenses, I go straight to that place. We go to established post, goods and service. Established post is compensation. Assembly members allowance, please. Another thing, assemblyman do not take salary. Assemblyman do not take salary. They don't take salary. So for them, their allowance is what? Goods and service. But if you go and see any other allowance related to a particular position, that one is going to compensation. But for assembly members, they don't take compensation. They only take allowance. And the allowance is what? Goods and services. It is TNT allowance actually. They give them TNT allowance and it's going to goods and what? Service. That's the assembly members. Assemblyman falling in, they don't take salary. So if you are dating an assemblyman, advise yourself. You see them with plenty money, call police on them. They don't take salary, how did they get that money? Okay, good. Goods and services. Office consumable goods and services. Purchase of consumable goods and services. We have interest on loan. You see this one? Public debt interest. Public debt interest. Interest. Other expenses. Other expenses. You see, we have other expenses. Remember, motor vehicle, you know, this one to, you know, they are our assets. Work in progress is also an asset. Loans and advances. Loans and advances. It's also advances. Advances. It's a what? Current asset. Current asset. Payables is payables. Long-term loan, accumulated fund. Accumulated fund is supposed to be at the credit side, and indeed, it's at the credit side. So all these things are balance sheet items. So we are going to post these ones. Okay, compensation, goods and services, public debt interest, and other expenses. So let's quickly go. How many seconds will it take you to post this? Any correct entry I post via, I will get a tick for that. Remember. So when I post, take your time. So we have non-established post. Established post. Salah. That's it. I think that's all right. So we go to goods and services. That one too is a bit voluminous. So let us try.
We have commission to revenue collectors.
Commission to revenue collectors. It's not. A commission. Commission is not compensation. It's not salary related. Do you understand it? It is goods and services. Please, are you okay? Commission is goods and services. It is not salary related. What's a commission? No? It's not salary related. It's even an expense to the company. Commission is an expense. It's an administrative expense related to what? Sales. Commission is not compensation related. Perfect. So it will come to what? Here. People are like, so last time when I taught you, okay, and I had some of your colleagues calling me, he said, you are good, though. Hey, you know how to teach you. Then I was thinking to myself, what you are seeing is the finished product. Do you know the number of years I've invested into teaching? I've taught for over 10 years. Yeah, I've taught for over 10 years. Over 10 years. Last time I was calculating it, and I'm like, what you are seeing is finished product. Conferences. So please, I beg you, express in that form. Why? No wonder a company say they want somebody with 20 years experience, but they don't want somebody who is more than 25 years. Also, I'm a trained teacher, but I don't practice it. So this is what we do, you know. Just assemblyman allowance. No need to write everything. It's the figures that are important. I've told you this one too. Consultancy cost 47. So office consumable. Purchase of office consumable. Purchase of office consumable. I'm done. It does. I'm done. So we go to the next one, which I didn't create any ledger for. Public interest. Public debt. Interest. Please don't close any of the ledgers until you finish the footnotes. There may be a footnote transaction that will affect it. So if you close it, you have to come and open it again and to make your answer number. So other expenses. And I've told you, if you don't want to write other expenses, just write balance bill down. Okay, we're done. I think that's all. It's only 4 items we saw there, right? Perfect. So we are done. Let's quickly cancel all the transactions. Cancel this, cancel this, cancel this, cancel this, cancel this. Cancel this, cancel this, cancel this, cancel this, cancel this. Don't cancel this because you've not used it. Cancel it, cancel it, cancel it. So the ones you don't cancel, it means you are yet to use. If you don't cancel, you don't have time. I think I'll be kind of to know the ones you have used, the ones you have not used. So the ones left on, they're all going to the balance sheet. They're all going to the balance sheet. Agbena. If there's any transaction you've not cancelled, it means you have not posted it. So you can post it. Okay, we remember we are fighting for the text, not the balancing. Okay, good. This brings us to the end of this small thing. Any correct transaction we post, we are getting marks. Okay, let's go to the footnote. Please, footnotes. Let's start. Footnote 1. It is the policy of the assembly to adapt accrual basis of accounting. Okay, we know that. Let's continue. Office consumable in respect of stationery. Stationery is inventory and other items bought for 1,800,000 remained unused. Remember, 1,800,000. Conditions of footnote. Listen to the following under footnote. For footnote, every transaction is treated twice. For footnote, every transaction is treated what? Twice. That's the first one. Secondly, for footnote, they bring the full amount. You have to remove the 3 zeros from it. They bring the full amount. You have to remove the 3 zeros from it. Good. So let's continue. Office consumable. Please, all of you, do the footnote 2 for me. Try it. Try it. I'm giving you 2 minutes to do. Write it. Don't talk. Just write your answer down. So that when I finish and I do it, you confirm whether if it was exams, you would have gotten correct or you would have gotten wrong. So first of all, Do it. When you do it, get the amount. And in the amount, do a short note and write. It will go to this and that. Maybe if you get the amount, say you are treating it twice. So first one will go to maybe current assets. Second one will go to, let's say, use of goods and services. Just write it that way and see if it was. If I finish, you compare whether you got it correct or you got it wrong. 2 minutes. So you have 1 minute more. Start work. Second footnote, if it was exams, how would you have treated it? Okay. It's okay. We're there, yeah. My idea. I've allowed you enough time. Okay, so please, let's do it together. After that, we'll compare to see. Let's do it together. After that, we'll compare and see. Quickly. Let's do it together after we compare and see. Quickly. Yes, so this is how I will do it after I tell me what you did. Good. Office consumable in respect of stationery and other items bought for 1,800 remained unused. So this is the cost. It means they bought the asset for cost. 1,800. I've forgotten our 3 zeros because already all figures are in 3 zeros. So forget our 3 zeros and do the only the 1,000. You understand it? Remained unused. So they bought asset at 1,800. This is the cost at which they bought the assets. Remember, inventory, you choose the minimum or the lower between the cost and the net realizable value. The cost and the net realizable value. If the asset is for sale, or sorry, if the inventory is for sale, it is cost and net realizable value. Net realizable value also means the net selling price. How much you are going to sell it. So between how much you are going to sell it and how much you bought it, choose the minimum price or choose the lowest. That's the principle. Unless the inventory is not for sale. If it is not for sale and it's supposed to be used internally, then you choose between the cost and the replacement cost. The replacement cost, how much it will cost you to replace the asset, or how much it will cost you to replace the inventory. So condition is the first thing is that it is between the cost and the net realizable value. It's between the cost and the net realizable value. Net realizable value, just say, if you should sell the inventory, how much you get. When you're selling the inventory, it is the cost plus profit. Do you get it? So it is the cost and the net realizable value. In between the two, you choose the lowest. In between the two, you choose the lowest. This is what happens always. This is what is supposed to happen. Between the cost and the net realizable value, choose the lowest. That is if the inventory is for sale. But if the inventory is not for sale, then choose between the cost and the replacement cost. How do you know whether the inventory is for sale or not? The question will always give you a clue. The question will always give you a clue. So in this question, they are saying that what? The cost is 1,800. The current replacement cost is what? 1,000. Replacement is 1,550. Meanwhile, the net realizable value is estimated at 1,400. Net realizable value is 1,400. This is how much you will sell it. We bought it at 1,800. It will cost us 1,550 to replace it, and it will cost us 1,400 if we are to sell it. But they give us a clue condition here that what? No market exists for unused inventory. It means you cannot sell it. If there's no market, why are you going to sell it? No market exists for unused inventory, meaning that if you sell it, nobody is willing to buy it. So therefore, this one is out, or it is out. No market exists. Therefore, you have to choose between the two. Which one is the lowest? And you realize that this one is the lowest. The replacement cost is the lowest. Hence, the value for the inventory will 1,550. Go straight to your balance sheet. Go straight to your balance sheet and write inventory. $1,550. 3 zeros. I'm done. You don't bring this 3 zeros, don't make it wrong. Don't make it wrong. So you know true anything in the workings. This one is not part of the workings, so I have to bring it. So that's the inventory. Positive number. It means this is the inventory remained at the end of the year. That's what it means. This is the inventory remained at the end of the year. Even though it was 1,800, but you are choosing the lowest, and the lowest the replacement. So 1,000, this is the inventory remained. And this same inventory goes straight to goods and services and go and less it from goods and services. This inventory go to goods and services and less inventory.
Sir, please, can you come again with the condition?
Did you join us last week?
No.
Exactly what I thought. Go and watch the recorded video on that. You get it. Come, go and watch the recorded video. Please come, go and watch the recorded video. Those of us who join, you understand, true of us. Those of us who join, you understand, true of us. Michael, are you the one that has the question?
Yeah.
Very true.
So ask the gentleman to go and watch the recorded video. It is free.
Please,
Because central government. Michael.
Yeah.
We're the one that has the question. Michael, ask you.
Yeah, I have a question.
Okay, ask
please,
question, please.
if you are given provision for bad debt as part of the note, are you going to
wait 1 second?
Okay.
If you are giving provision for bad debt, the question is, have you been giving provision for bad debt? No. Don't make the thing so difficult for yourself. When you get to that crossroad, you pass it. Don't worry. Okay. For now, enjoy the moment. Don't make the thing difficult for yourself. Okay. If you get there, ask me that question. But for now, let us deal with inventory. Understand inventory. Okay. Okay. Definitely, you get a question on that. Okay. You will solve a question on that. If in case you don't solve a question on that, solve a question on that and send me the answer and let me help you with it. Okay. But for now, let us understand this basic thing. Okay. But don't trust me, you solve a question on that. Why? Because if you introduce that element right now, somebody will be confused. Somebody who has understood this small thing, but final dream, not the night but our dream. So for now, let's concentrate on the inventory for now. Thank you so much.
All right.
Perfect. Okay, good. So let's continue. So we are done. You see, we've treated it twice. As you saw, we've treated it twice. Okay, good. We continue. The next one, the next footnote. Please quickly solve this footnote. This one is only 1 minute. Property rates received in respect of 2022. Please, we are in 2021. And they are saying that property rates received in respect of 2022. We are preparing financial statement for 2021. 2021, December 2020. And they are saying that property rates received in respect of 2022. Financial year amounted to 20. So how will you solve this one? Footnote B. How you treat it?
We'll
I'll give you
it.
1 minute. No. Write it. Write it down. You should do your own thing. Do your own thing. After that, we'll do it together. I just want you to give it a try so that. Okay, what did you get? Madam Gifty, you're welcome. Madam Gifty, you're welcome. Okay, let's go. Let's do it together. Quickly. So please, listen. I was a property rate received in 2022. In respect of 2022, we are in 2021, and we have received an amount that is not meant for this year. Tibofono. We are in 2021, and we have received property rate that is relating to 2022. Do you understand it? What it tells you is that this property rate you are seeing here, property rate. What it tells you that this property rate you are seeing here, 73,000. It is an income, right? It contains property rate for 2021 and 2022. You understand it? It contains property rate for 2021 and 2022. And the question was good enough to tell us that, oh, the 2022, the year 2025. This is for 2022 amount. So it means that this amount, it contains 2022 and 2021. But remember, statement of financial performance as at the year ended 2021 should contain only 2021 transactions. It should not contain 2022 transactions. So if this amount, which we have recorded in our books now, is both 2021 and 2022 DR, then you have to subtract the 2022 DN from it. I come again. When you have any amount or when you have any balance, that is 2 years. When you have any balance, that is 2 years. Or when you have a situation like this one, property rate is for 2022 and 2021. You understand it? But you are preparing financial statement for 2021. Then any balance, any amount that is related to 2022, you have to subtract it from it. If it is owing, you add. If it is advanced, you subtract. You remember, if it is owing, we add it. Because as we use so we add it. But if it is advanced, they have overpaid. So subtract the 2022 own from it. Subtract the 2022 own from it in the statement of financial performance. So what you do is that this 73 to 30, less 2022 figure. Perfect. So just go to where did we post property rate? Where did you post it, please? Where did you post property rate? Where did we send it to? Where was property rate sent to?
IGF.
So go straight to IGF. and go and subtract the 2022 amount from it because it's IGF. So you write property rate for 2022. Tifrimu, Nenka 2021, then subtract it. So that will remain with what? Only 2021 transaction. Do you get it? So property rate 2050. 2050. This for 2021. IGM for 2022. Sorry. Property rate 2022. Subtract it. So when you subtract it, it is an advance payment, true of us. An advance payment is current asset. Advance payment is current asset. Advance payment is current asset. So send to under current asset. Property rate. Please remember, if it is owing will come to current liability. If you are owing, it is current liability. If you pay in advance, it will go to what? Current assets. That's the difference. Know that.
So I have a question.
Ask a question.
The property rate. If you are using the T account, that means that if it's ID, it's revenue, and revenue has a credit balance. So that means you are debiting. To take it out of the IGF, you are debiting.
Perfect. You are debiting.
So the other side will be to credit. And if you are crediting, you have to credit liability, not asset.
Yeah, you ask a question. You are really asking a question. Come again on the ask question. You said that when I use the T account.
IGF is a credit balance. But this time you are acting the IGF, so you debit it. So the other side will be to credit. So you can only credit the liability because if you are paying in advance.
I understand you. I'll not let you go further. Okay. Sorry for cutting you. I understand you. This is not the first time somebody has asked this question. The very first time somebody asked was this gentleman who was very good in accounting, and he brought up this thing. In fact, for the first time, it confused me myself. I was like, yeah, you're right. And he followed what he did. After I did it, it's like, no, the thing has changed you. You understand me, but please, you just adjust to this. Why? It's supposed to be an asset. Why?
Okay.
Just say now I'm confused you for your own good. Just understand it this way. Just bend your accounting principles, Kakra. Adjust it to this. Why? I know this is not the first time you're analyzing this. You have analyzed this before. Am I lying?
No, sir, you're not lying.
I know. It's as if you were ready for this question. Yeah, you're right. You bend your accounting principles, Kakra. It's supposed to be an asset to you. Well, it's like
something you receive in the future cannot be a liability.
Please, I'm coming. I'm processing something. What the gentleman is saying, wait, let's think about it this way again. Advance. Wait. Let's read the question. I think I'm understanding what he's saying. Please.
If I could chip in.
Let's read the question again. Property rate received. So you have received the property rate. Hence, it will be a liability. You didn't pay. Listen to it. You didn't pay the property rate. You rather received the property rate. So it is somebody's money that you are keeping with you. Do you get it? This is somebody's money you are keeping with you. So you rather received it. You didn't pay it. So it's a liability. Please do you understand it? Yes.
No, sir.
It's a liability. You received
so I don't understand it, sir.
Yeah, you understand. Take your time. Myself, I didn't analyze it well. See, listen, this is what is happening. Pay attention. This is somebody's money you have received. You have not paid it to. If you have paid it to a vendor or a supplier, it becomes an asset to you. That is MMDA. But this time around, you are keeping somebody's money. It's as if you are holding the person's money for the person. The person can come for it at any time. So it's a liability to you. You have not offered the services yet. Please do you understand what I'm trying to say? We have two types of advances. We have a first advance that you will pay. If you pay, it becomes a current asset to you. But if you receive it, it becomes a current liability to you. Over here, we have received it. What I say? So we have received it. So we are holding the people money for them. Whoever paid the property rate, no, we have not offered the service. Remember, revenue is gain when you offer the contract term or when you perform the contract, the terms of the contract. That is where we say that what the revenue is earned. Revenue is not earned unless you perform the contract obligation. Once you perform the contract obligation, that's when revenue will be earned. You have not performed the contract obligation for 2022. So the person is like, the person has given you money. For the person, it's an asset to the person, but for you, it will be a liability. Please, are you getting it?
Yes, sir.
So please, yes, you're right. You're very right. Sometimes you have to track students more and see if they are following. So indeed, you are following. You are following. Yeah. It means you are following. Good. So please, yes. So this one becomes a current liability. But just you subtract it from there. So this will become a current liability and not a current asset. Why? Because we didn't pay the advance. We rather received the advance. Okay. So it becomes advance. Property rate 2050. Perfect. So that is that. Please, any question on that? Either than that, we go to the next footnote. What is the next footnote? Okay, next footnote. Salaries outstanding. Please, all of you try this one for me. Salaries outstanding. Do it the way you understand. After that, we all solve it together. Start with, please. You have 2 minutes, quickly. Okay. So please, let's do it together. Now, salaries outstanding. Next one. Salaries outstanding during the year amounted to 750,000 and other expenses amounting to 1,105,000 paid in respect of 2022 year. So salaries are standing during the year. So please, if it is outstanding, it is owing. You add it, right? It means that you have used it, but you've not recognized it in your books. So therefore, you have to add this one to salaries. So salaries, we all know is going to what? Compensations. Just go straight compensation and write salaries. You get it? Good. Then when you finish, the next one is what? Expense amounting to paid in respect of 2022 financial year. Please, 1 second. Let me finish with this one. This leg. So please, it's a liability. You have not paid. Salaries outstanding. So you just pass these two transactions and you are done. When it is outstanding, it means you have used it, but you have not captured it in your books. So add it to the respective ledger. So we add the 750 here, and we send it to what? Current what? Liability. Okay. Some will decide to send to payables. It's the same thing, but it's the easiest thing. I've treated that one. Go to the next one. The next one is other expenses. Other expenses amounting to 1 million, in fact, 1105 paid in respect of 2022. So please look at the difference. Okay, look at the difference. I didn't pay attention, but look at the difference here. They say that what? Paid. This one, we didn't receive it all. We paid the advance. We paid the advance. So for us, it is an asset to us. Do you understand it? For us, it is an asset to us. We paid the advance. We paid it. So this one is the current asset. But if we received it, that means you are holding somebody's money and becomes a liability. Over here, we paid in advance. So this is the one that becomes an asset to us. So other expenses amounted to 1105 paid in 2022 in respect of 2022. So therefore, what do you do? Just go to current assets and write balance sheet, balance sheet, balance sheet, balance sheet, balance sheet. Go to current and write other expenses. $1,105. Agbena. Then go to other expenses. Go to other expenses. Then write advance for 2022 is what? 1105. You subtract it from the 2020 to this amount belongs to 2022 and 2021. So less it. Agbena. So please, there are two ways the advance can come. So you ask yourself, are we the ones receiving the advance, or we are the ones what? Paying the advance? If we are the one that paid the advance, that means that our money is with them, hence it is an asset to us. If you are the one that received it, that one is not good for us. It becomes a liability to us. Perfect, 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 perfect. Agbena. So let's continue, please. We go to the next one. Please, the next one is what? Capital what? PPE schedule. So skip it. Go to the next one. VI. Please do the VI. All of you. I'm giving you 2 minutes to do the VI. All of you. Do the VI. All of you. Try it. Try it. I think this is better for you to put your hand on it. Then after that, you all compare to see if you are getting the same answer. Do you know what could be your weakness? What could be your weakness is when you feel, oh, this thing is not difficult, I'll not put pen to paper. That could be your weakness. Trust me. Okay, that could be your weakness. But then, if anything, you want to try, at least try. Okay, because I don't want to go to other exam, so it's not self-stepping. So try, even if you know it or not, try it again. It gives you confidence. Okay, so if you decide not to do it at all, I know I'm saying you should try it. So if you don't decide not to do it at all, it's not a good thing. So try it at least. I won't try.
Please, sir, can you can you go to where the work in progress is at the try balance? Let me check something, please. Okay.
Have you seen it? Work in progress amount
Yes.
is 2520. Work in progress amount is 2520. Can you mute yourself? Your background is a bit hazy. Thank you. Let's be fast on that. Hello? Who has finished, please? In fact, it's okay. Stop work. Salom, how did you do it? So how did you do it? Please, who can tell me how he or she did it? Quickly, please. This
All right.
more or less.
So we less the 2,000 from the work in progress and add it to building cost.
Is it just 2,000?
So it's 2 million, but since we are keeping 3 zeros,
Okay,
that is
good.
what I've done for the first part.
Okay.
The second part is what is a bit confusing. I wanted to seek clarification, but I would have treated it as use of goods and services, maybe, and then put the amount to building.
Okay, so thank you. That is that. Who else? Okay, thank you, my boss.
Thank you to say.
I also did exactly what he did, but then with the second one, the 800, I credited other expense. And I added the 800 to building again.
Okay, good. Thank you. Your name?
Gertrude.
Gertrude. Okay, thank you. Please, who else?
Say what I did was that the 800 I added it to other expense, and then current liabilities too. I put the 800 there, and with the 2,000 I left it from the work in progress, and then when we go to the PPE schedule, I'll add it to the buildings. Then also there will be a depreciation aspect on that.
And what do you get for the depreciation?
At 20,000. If I remove the 3 zeros, 20. Yes, because the time it was bought, 5th July, that's in the middle of the year, that it was completed.
Okay.
Yes.
Interesting. Please, who else? Quickly, please. Just tell me what you did before you all do it together. Hello? Hey, is that a snake? Mr. Perpetua, what did you get? Or how did you solve it? Mr. Kofi, how did you solve it? Mr. Tony, how did you solve it? Please, one last person, then I take over quickly. Please let me fast on that, okay? Okay, since nobody, then let's quickly do it, okay? So what you guys are saying, you are very correct. You are very, very correct. You are all correct. Okay. In fact, I like the way you are treating the work in progress aspect. If it seems the work in progress, no, it's in line. So quickly, let's do that. So they are saying that what included in work in progress is an amount of 2,000. So this amount is in work in progress. Is that not so? That is so. So count work in progress quickly, okay? Work in progress. No, it's 2,000 rather, not 20,000. Is it 2,000, right? So you get 18,520. This amount, send it straight to work in progress. You don't let me send it to work in progress before anything happens. I've sent it there before anything happens. Good. You see this amount, this 2,000. They are saying that what? Tirofono. Included in work in progress is an amount of 2,000 relating to building, which was completed, commissioned, and put to use on 5th July 2021. After an additional amount of 800,000 was spent to complete the pavement aspect of the building. After an additional amount. So this amount was spent to complete the what? The project. So you have to capitalize this amount. You have to add it to the cost of the building. So why are you sending to goods and services? Why are you sending to other expenses? It's an amount they use to complete the building. So you capitalize it. If you capitalize it, no need for you to expense it again. After an additional amount, they say additional. So it is this 2,000 plus this amount. So in all, no, it is 2,800. That is what you capitalize. So these two amounts, you send it to what? PPE schedule. Agbena, it ends there. Yeah, that's addition for the year. That addition for the year. It is this amount that you are treating twice and not this. When they're just passing an information to you. It's just an information they're telling you after an additional amount of 800,000 was spent to complete the pavement. They're just passing an information to you. But this one, no, is the one you're treating twice because it's included in work in progress. That is, they made a mistake there. It's 2,000 relating to building, which was completed, commissioned, and put to use on 5th July 2021. So rightfully, it means that there will be a what? This one on it. Okay. So we are done. No? We are done. We are done. We are done with the first phase of the 2,000. We are come to do the second phase. So now that we are done, you cannot. Okay, let's do this one. I told you that the PP schedule should be the last thing. The PP schedule should be the what? The last thing that you do. Okay. The PP schedule should be the last thing. But then we are done with the 2,000. This one, you less it from the work in progress. Maybe let's assume I don't know anything. Just less it. You lessen it. Almost say included in the work in progress is 2,000. So go and subtract 2,000 from the work in progress. You are done. And send the balance to wherever you send work in progress. So work in progress is not supposed to be this. It's supposed to be this minus this. That's what you did. You sent it to work in progress. Then what happens to the 2,000? Where was it supposed to go? It was supposed to be added to the building. By mistakenly, they added it to work in progress. So you have to prepare the PPE schedule and add the 2,000 there. Okay, when you read this one is not relating to work in progress. Okay, the last footnote is not relating to capital anything. So quickly, let's prepare the PPE schedule before you do that one. Okay, quickly, let's prepare the PPE schedule. So PPE schedule. PPE schedule. I'm teaching you, okay? So therefore, I'm trying as much as possible to make life simple for you, okay? So let's go. Then 61,000 6 motor vehicle. Please someone should capture this. Someone should capture this. So when you're preparing PPE schedule, this is the cost. And this will be accumulated depreciation. This will be the cost. This will be the accumulated depreciation. This will be the cost. And this will be the accumulated depreciation. When I'm preparing PPE schedule, bear this in mind. Bear this in mind. This will be the cost. Accumulated depreciation, cost, accumulated depreciation for all. Cost, accumulated depreciation, cost, accumulated depreciation, cost. So you just write the cost, write accumulated depreciation. So this 6 marks or this 6 ticks there, you can't get it wrong. You can't get this 6 ticks wrong. Never get this 6 ticks wrong. Anything. So quickly, please, whoever captioned it, let's go. Prepare the PP schedule. What the first one? Please, unmute yourself, please.
Motor vehicle.
Perfect. So we have motor vehicle. What else?
Furniture.
Furniture. And fittings.
Building. Yeah.
Building. God bless you.
No.
So you have the cost. Never get this wrong. Please, what is the cost?
61,180.
You can't get this wrong. I'm just picking it from the question. What else?
25,000.
Please, what else?
119,200. 119.
Okay. Was there any addition? Was there any addition? Was there any asset they bought? Or was there any asset they were supposed to add, but they didn't add? It's a question. Was there any addition? Was there any new asset they bought? If they bought any new asset, add the asset to it. If they didn't buy any new assets, ask yourself another question. Is it that they bought an asset last year, but they didn't bring it? Or they made a mistake and they sent it somewhere else? If that's the case, then bring it here now. If nothing of that sort exists, then you are good to go. So first question, is there any new asset they bought? No. Did they treat a certain asset in a different ledger? Yes, they treated building of 2,000 as work in progress. Meanwhile, they have finished with the building. You understand? So that asset will come to what? Building. So it is 2,000 plus additional 800 for pavement. That cost for payment, you capitalize it. Hence, the total amount will be 2,800. This is the new asset they bought. So this is the new asset. So therefore, we have 61180. We have 25123. Add the 2. What do you get?
122.
What?
122,000.
Perfect. Then we come to accumulated depreciation. Accumulated depreciation, the one in the question. Accumulated depreciation, she said, depreciation for over some number of years before this current year. This current year is not part. Over some number of years, that accumulated depreciation. So give it to me, please.
18,220.
What else?
10,000.
Because they said this one is depreciated by 10 years. Okay. We are not there yet. What else?
7,000.
7,000.
7,450. 7,400.
Okay. Like this.
Yeah.
Perfect. Now we come to depreciation for the year. Depreciation for the year. Depreciation for 2021 is, this one is 10%, this one is 5%, and no, 10 years, 5 years, and this is 50 years, right? So the cost divided by 10, the cost divided by 5, the cost divided by what? 50. Do you get it? So please quickly, all of you should work it. All of you should find the depreciation for the year. All of you find the depreciation for a year. Find the cost. The cost. This is the cost. This one divided by 10, this one divided by 5, this one but this one, remember, there's another one here. So this one too divided by 50. So you add the depreciation for this, add the depreciation for this. Then the total is what you put here. If you don't want trouble to, just use the total. When you add this and this, you get a total. So this total amount divided by 50 years, it's the same thing. You still get the same thing. Okay? All of you should do the for the 3. All of you. Give me the first one. I think it'll be 6118. The second one.
5,000.
And the third one.
6,100.
Please, all of you confirm for me, please. All of you confirm for me.
Yeah. I think the building is 2440.
Yeah.
The building is what?
2440.
440.
2440. Please, won't we factor the time the building was put to
You factor it.
use?
You factor it. Because it was, what do you get?
2412.
2412.
Yes.
2412. Yes,
please.
because see, it's not a full year from July. And beginning July, if it was 31st July, then you not factor July inside. This is 5th July, so it's not a full year. Do you understand it? Perfect. So this 2800 no, times a divided by 50 years times 6/12 years. Sorry, 6/12 months, 6 months over 12 months. So you get, is it 23 or 28? Please, what did you get?
28.
28, perfect. So this 28 plus the depreciation for the year. And that is that. Thank you very much. Good. So 2412. 2412. Agbena. So please, this is the most important thing. So add them, and this is the final one. What did you get? That depreciation for the year. Add the depreciation for the year. That is what go into consumption of fixed capital. Please, what did you get? What did you get, please? This plus this is what you are interested in. Depreciation for the year.
30.
5,000. What?
135.
530.
Hey, somebody say 13. Somebody say 10. Like this.
Yes, please.
Yeah.
Okay, good.
Yes.
So send to consumption capital.
35.
Okay, good. Thank you. So just send it straight to this place. Consumption of fixed capital, consumption of fixed capital, consumption of fixed capital, consumption of fixed capital, consumption of fixed capital. I'm done. Okay, let's go to the last one. Please, back on the last footnote.
We didn't treat the it was stated that this expenditure has not yet been paid.
This expenditure has not yet been paid. But it is an accrual concept, okay? Are you following?
Sure.
It's an accrual concept. I believe you understand.
Yeah.
So whether it has been paid or not, it has to be captured. That's why we captured it. You capitalize it.
Yeah, I was talking about components.
The what?
The liability component should be treated in the statement of financial position. Not been paid, the 8,000.
The 60,000.
The 800,000, sorry.
Okay, so how do you want to capture it in the state of financial performance?
As payables.
Current liabilities, also.
As payables.
You mean, yes, this expenditure has not yet been paid.
Yeah, so payables.
Yes, you are right. But please, let's take our time, okay? One at a time. So what I was trying to tell you is that this amount, you don't treat it in the statement of financial performance. Do you get it? You don't treat it in a statement of financial performance. I believe you understand. So, because you can't put it in under any of them. But then the question didn't give us further information. If the question has given us further information to suggest that it's a non-current liability, that's when you put it under non-current liability. I believe you understand.
Sure.
Perfect. So it's saying that this expenditure has not yet been paid. So if it has not been paid, you see, once there's an offering, okay, or there's a job that has been done, we either pay cash or what? Or it will be on credit. If it's on credit, it's a current liability. I don't subscribe to the payable thing, okay? Because sometimes if you go and put it under payables and it is not payables, okay, maybe you are thinking it is payables, but then it is not payables on the marking scheme. You will get it wrong. So usually, I prefer you put it under current liability. Don't put it under payables. Please, you have to understand. You don't put it under what? Payables. Just send it to current liability. Just to be sure that you are getting everything correct. If it's not payable, you go and put it in payables, you get the total value for payable wrong, and you put it into payables, you get it wrong as well. Because at the end of the day, you transfer the amount of payables into your statement of financial performance. And if payables is wrong, it is wrong. You get it wrong at both ends, and you lose the text. So our advice, you put it under what? Current liabilities. Just put it under current liabilities, and you are good to go. So, in fact, anytime students say payables, they confuse me, okay? Because you can't determine what is payable. What will be a payable to you will not be a payable for the person marking. But for current liability, you can't get it wrong.
That's true.
Yes.
Sir, please. So confused.
Please come again.
I'm a bit confused.
I'm saying that.
I mean, you have capitalized the 800. You've
Yes,
capitalized
but they are saying that the expenditure has not yet been paid. Do you get it? So once it has not been paid, you see, if it was paid, it would have been cash. I believe you understand. So the reason why I'm not throwing much attention to that is because, listen, there are two ways of treating this. Okay, there are two ways of treating this. It's either they have already captured it. There are two ways of treating it. You see, it's either this one has already been captured as part of the PPE. You see that the work in progress has already been captured as part of the PPE, or it has not been captured at all. And the question didn't tell us that this transaction has not been captured. But because we have added it to what? Additional assets. We've treated it as additional assets. Because we treated this amount as additional assets, then it means that we are treating it as if it has not been captured. So if it has not been captured, then we have one leg for this. This 800 is one leg. You understand it? Because it's as if we have now bought a building, 800. So if you bought a building 800, then the debit is the 800. Where is the credit? Please, do you understand it now? For the 2,000, it has been treated as work in progress. We subtracted it from the work in progress. Okay. That's the credit side. We subtract from work in progress, and we have added it to this. But the 800, they said that it has not been paid yet. So if you put the 200 here, then where would the corresponding entry be? And my colleagues are saying that you should go to payables. But I'm saying that to be on the safer side, don't send it to payables, but send it to current assets. Okay. In fact, if possible, don't even create a ledger for payables. To stay out of trouble, don't create a ledger for payables. To stay out of trouble, don't create a ledger for payables. Just send all liabilities to current liabilities. Once it's a liability, like I'm doing here, once a liability, send it to what? Current liability. So you just come and write pavement expense 800. And that's the credit side. Don't send it to the statement of financial performance because this shouldn't be an item there. Okay, this is an asset. You capitalize it. This is an asset. You capitalize it. Then we go to the next one. Please, kindly solve the last one for me. They are saying that interest on loans to staff as at the rate of 15% per annum. Interest on loans to staff is at the rate of 15% per annum. So last time, I don't know if it was a class, but then I remember advising students that if anytime you see a loan taken, you have to ask yourself, the interest you are paying, is that the appropriate interest you are supposed to pay? Or we are supposed to pay more than the interest in the trial balance? You understand? Because sometimes if you invest, okay, there's a percentage you are always supposed to collect. But the bank might say that we don't have enough money. So you take this one and you pay the balance later. In the statement of financial performance, you don't have to bring the part payment of the interest. You have to put all the interest that you are expected to receive. So in this question, they're saying that what interest on loan to staff, when they gave interest on loan to staff, the interest is what? 15%. That's interest on loan to staff. So go straight to the interest on loans. Loans and advances. There's it. This is the loan they gave to staff. 2,700. Now the interest on this loan is supposed to be what? 15%. So please find 15% of this. And what do you get? 15% of 2,700. Please, what do you get? 2,700.
3105.
Now this one becomes, this one, where should it be recorded? Interest on loan to staff, where should it be recorded? In the statement of financial performance, where should it be recorded? Under IGF. So go straight to this side. Look at it. It's on the credit side. This is a credit to us. Interest on loan to staff, they recorded only 10,050 or 1,050. They recorded only 1,050 instead of recording what? 3,105. They recorded 10,050. Meaning they didn't record the full amount. So we have to add the balance to it, because accrual concept says that revenue is recognized when earned. Once we earn it, we have to recognize it. You understand it? So we have earned 3,105 and not 1,050. So the balance, making 3,005, you have to add it, which is 2,055. So come to IGF and add the difference. IGF and write difference. 2,055. That is what? Interest. You see, they recorded part. They recorded only 1,050. We have to add the difference to make the total of 3,000 and what? Because that is what we have earned. We have earned 3,000 and not 1,000. So the difference, we have to put it there. The amount we have not received, what I say? The amount we have not received, it is a receivable to us. The amount we are yet to receive is a what? It's a receivable to us, something we are expecting to receive. So go straight to the balance sheet and go and add it to receivable. Interest on advance. 2,555. 2,555. Why? Because listen, anytime you see loan, interest in this manner, you should know that we are expected to receive a certain amount, but the amount given to us now, is it up to that amount? So look at this one. Interest on long-term loan is 10%. Interest on long-term loan is 10%. So you ask yourself a simple question. Have we received up to the 10%? The interest we paid, was it up to the 10%? If yes, then we are done with it. If not, then it means that we have to increase it to the 10% in the statement of financial performance. Then the trial balance, in the balance sheet, we recognize it as what? Payable, because we are the ones supposed to pay it. So to go to current liability. We are paying the loan, okay? Loan interest, we are supposed to pay 10% on the loan. So look for the loan amount. Look for the loan amount. What a long-term loan? Did a long-term loan, 75,330. Long-term loan, 75,330. We are supposed to pay interest of what? 10% on it. So it will be 75,333. This is the interest you are supposed to pay, 75,333. This is the interest we are supposed to pay, 75,333. This is the interest we are supposed to pay. But how much interest did you pay? Interest. Any interest. We paid 5740. We paid 570. Something I'm supposed to pay 7533. We paid only 5740. Then it means that we didn't pay all the interest. We paid some. But accrual concept is saying that you are supposed to recognize the full amount of interest you are supposed to pay. You're supposed to recognize the full amount of interest you are supposed to pay. Do you understand it? So what would be the difference? Please, how much will be the difference?
Hello, sir.
One.
Please come again.
Hello, sir.
193.
Hey, Master, Fio. Yes, give it to me again.
1793.
1793. This amount is what we are owing to pay. We are owing this one, two of us. True. So when you go to interest.
Hello, sir.
Yes, come in.
Please, they said the amount was on a monthly basis. Does it affect the question in any way?
Please, once again. Interest on loan to staff at the rate of 15% per annum. Interest on long-term loans at the rate of 10% per annum. Please, you said something. Madam.
Okay, I get it now. Thank you, sir.
Okay. Please, somebody else wanted to say something.
Yes. You see, the interest on loan stroke financial assets. I saw two figures, and it seems the interest, the figure at the credit side, you treated it as an income, as if it's a loan that we are giving out. And the one at the debit side, we are seeing it as an interest that we have perhaps gone in for the loan and the interest that we are supposed to pay on it.
Perfect.
Is that how it is?
Meaning you didn't join us early, right?
Exactly. In fact, I didn't know. In fact, I've just joined the platform and
okay, no problem. Don't worry, no problem. See,
a lot of things.
No problem. See, the debit side, okay? Yeah. Any amount on the debit side is an expense. Any amount on the debit side of the trial balance is an expense. Do you understand it? And any amount on the credit side is an income. Do you get it? So this amount is treated as an expense because in the statement of financial performance, we have public debt interest. State of financial performance, we have something called public debt interest. And we have even recorded it that public debt interest. I say 5740. It means this is the interest you are paying at the end of the year. This is the one we are paying in cash at the end of the year. You understand it? And the other one, interest 1050. 1050, because it is an interest that is coming to us. So therefore, we will record it as what? IGF. Please, you get it?
Yes.
Good. But the question is, the interest we paid, no? The interest we paid, this is 5740, no? Is that the amount of interest we are supposed to pay? It could be that you are supposed to pay more than that, but this is the one you have money to pay now. But Accra concept is saying that don't record transactions you have money to pay, but rather record amount you are expected to pay. Yeah. Are you getting it?
Yeah.
That's Accra concept. So you ask ourselves, okay, how much interest were we supposed to pay? And the footnote is telling us that we were supposed to pay interest of what? 10%. Yeah. The footnote is saying that we were supposed to pay long-term loan. We are supposed to pay 10% on it. So find the long-term loan. What is the long-term loan? Long-term loan. Look for the long-term loan. This is the long-term loan. Long-term loan. You are supposed to pay interest of 10% on it. So 10% is 5733. This is a long-term loan. You understand it? Yeah. So this is the amount we are supposed to pay. But we actually paid this amount.
5740.
You understand it? So the difference, add the difference to it. So that it will be 57133. And the difference is 1793. So it goes straight to payables, loan, and right. Please, I believe I'm correct.
Yes,
So
please.
that 7533 maybe. So this is what? Interest owing. I'm owing this one. Once I'm owing it, it goes straight to what? Current liability. That's what I'm saying. That don't go and add it to payables. Don't go and add it. Me once you mention the payables and the things, no, you tend to confuse me. Just send to what? Owing. Interest. Medical interest and medical charges. I mean, 1793, right?
Yeah.
Maybe. Then the other one is interest.
Sir, I want to ask a question.
Yes.
Creating that account for payables and receivables. No, payable, yes, definitely will then be current liability. But if you don't create that account, and then you just write the items by itself and the current account, will there not be any penalty or something? Will you not be penalized? Won't you lose any mark for that?
You creating payables, you don't create it, so will you lose marks or not? It's a very good question, but the answer is you don't lose any marks, okay? Because they have the marking scheme in their hands, okay? So they'll go straight to current liability. You understand it? And they'll be taken. You understand it?
Okay.
Any accountant, any person with accounting background, though, that salary is outstanding, is a what? It's a liability. In fact, the marking scheme, when they go there, you know how you not lose marks. Where you lose marks is if it's not payable, you go and put it on a payable.
Yeah.
Do you get it? If it's not a payable, you go and put it on a payable. Okay. That one day you lose marks. If you create a payable account, you are supposed to transfer the total amount to the balance sheet.
Okay.
So that one you lose marks, but then you not lose marks if it's not inventory. No, you not lose marks. You can never lose marks. Okay. Perfect. So that's that. I think you are done. Okay, you are done with the treatment of all the footnotes. Now, all what you are left with is what? Is come and do the final posting. Okay, come and do the final posting. When you go here, assets. Let's go to the asset side. So you see, asset side, there's nothing here, nothing here, nothing here, nothing here. We have these ones. Other expenses, we've treated it. That's why you have to be canceling. Other expenses, we've treated it. Motor, we've treated it. Building, we've treated it. Furniture, in fact, we've treated these ones too. Work in progress, we've treated it. Loans to staff, we've not treated it. So loans to staff is a current asset, right? And cash too is current asset. So please pick these figures. When I go there, give it to me. Loans to staff and what? Cash and bank. So let's go. Balance sheet too. Go straight to the balance sheet. So just go and write. Loans and advances. Next one is cash and cash equivalent. How much? Please, how much?
$57.30.
57.30. Yeah, okay. Now let's go to the liability side. We are done with these ones. So we've posted everything here. Okay, come here. Contract retention is a liability. So please capture that. 13,970. Contract retention. Capture that. Go to the next one, which is withholding tax. 45,400. 45,400 withholding tax. So capture that one too. It's a liability. We have interest. This interest, we have dealt with it. We have loans and advances. Okay, we've dealt with that. Payables. Capture this one too. Payables. 96,760. 96,760. Long-term loans. 3530. Accumulated fund. So please capture that. Can capture it on your phone. When I get there, you give it to me. So let's quickly go there. Okay, give it to me. Non-current asset. What do you have? Or yes, liability rather. Let's go to the liability side. Okay, give it to me, please. Please mention them to me. Retention, yes.
Withholding tax.
Here. Withholding tax. How much? Withholding tax. Withholding tax, please.
Withholding tax, 45,400.
Contract retention. How much?
970.
Please, what else?
That's all.
Long-term liability, payables, please, payable. 97, 96.
676.
And long-term, so give it to me.
Long-term,
This question, give it to me, please. What do you have?
For the payables.
Yes, payables.
96760.
9670.
9670.
Okay. 9670, right?
No, 9676.
No, 96760.
967.
96760.
Okay. They have long-term liability.
Long-term loans.
Okay, long-term loan.
75. 33.
75.
330.
Okay, good year. Accumulated fund. What was it? The last
70870.
Yeah, this is it. Okay, so now that you have finished putting everything from the trial balance, so you have put everything from the trial balance. You see how we did it?
Yes, sir.
After I finish the footnote, then you go and put everything from the trial balance.
Hello,
now I have finished everything. Please come in.
Please, so the PPE schedule that we did,
the
main significance is that we get the accumulated depreciation and send to the balance sheet, or there's any other thing too?
That is one. Okay, it has two significance. One is for the PP for this one.
Consumption of its capital.
Then after that, we add this, and get a total value. So please add this to this, add this to this to this. Okay, please add them for me. So it will be this amount less this plus this. Sorry, this one to is depreciation. So this one to is less. So please kindly less them for me. Give me the finances. Please be fast, eh?
Motor vehicle. 36842.
842.
Yes, give me this one too.
10,000.
This one too.
108,450.
Some of you don't take your time, cry. More relax. The thing ain't kakra. Open up. Say, you have not finished. But the coffee for baby, ay, what Let's go straight forward and tell me, say you are not done with this. But the coffee for baby, relax. You'll get there. Okay. Okay, good. So quickly, give me this.
The business is wrong.
The third one is wrong. The building is wrong. Yes, sir.
This one that you are saying it, no. Are you not the one who gave it to me?
No, sir.
Please give it to me quickly.
11238.
11. Are you sure this amount is correct? 11238.
138.
1121.
1121.
38.
Perfect. So you see this amount you've given me, give it to me again. Don't ask me why. Just give it to me again. Furniture and fittings. The last one is what? Buildings. So give it to me.
36842.
36842. Yes, next.
10,000.
Next.
1121.
38.
Okay, okay. I believe we can now add. Please, what do you get for this?
Oh God.
676.
310.
Please be fast and mention the figures too for me. Quick, like that.
676.
Yes.
310.
Yes. Donation and grant is the same thing. Perfect. What about this? What do you get? IGF.
So please go up a little bit.
Oh, come in, quick. Those going to work, we are done with the treatment. We are just adding. You can go, okay? When you come, David, come and watch the recorded video and see the addition, or you can go and add it at your workplace. Are you finished?
No, please let's go up.
Someone should also add compensation. If you don't add well, I'll get wrong answers. So, and to not balance, it's not my fault because you didn't add well. But the important thing is the footnote. What do you get?
The place for the compensation.
Which compensation? IGF.
What did you get? Compensation.
58 to 120.
Okay, thank you.
So that's IGF. Oh.
What? No, that's not IGF. Give me the IGF. I want the IGF.
441935.
No, it's rather 464.
464.
Yeah.
Okay. Let's go to goods and services. Someone should add goods and services. Another person should add other expenses. Please mute yourself if you are talking about that. Someone should add other expenses. Other person should add use of goods and services. Please, quick.
Other expenses 24515.
For the video. 24515.
Yes, boss.
Perfect. Use of goods and services. Who had
easy.
439
you are waking out. One can say, oh, easy.
Osmi Nyanina Jano. We are done. Please, I want someone to take a screenshot. I want someone to take a screenshot of them. So let's go. Take a screenshot of these two. If I take a screenshot of these three. Decentralized transfer. Okay, take the screenshot of this one too. Public debt interest, other expenses, and compensate this one, use of goods and services. I'll take a screenshot. Okay, let's go. Please give them to me. Oh, you didn't finish. Or you give me the revenue side. Give me the revenue side. Please, decentralized transfer, what did you get? Decentralized transfer.
So wait, let's go.
Please, I'm not hearing you. Network.
676
310.
310.
IGF, please.
IGF 464
935.
Donation and grants.
8770.
What's the total? Add all for me. Okay, while they're adding, let's go to compensation. Please, who took compensation screenshot? Or nobody?
It's 582,120.
Repeat.
582,120.
582,120. Goods and services. Who took a screenshot?
And no now free honor.
Hey.
So,
Anyone?
so it's 539830.
Oh no, take a screenshot of this. You forget that one for now.
Okay. Okay.
I finish.
Yes, please.
Yeah.
582,120, right? The compensation. Give me goods and services.
Goods and services is 439830.
830.
Public interest.
7533.
Other expenses.
24515.
Dash. So please add them for me quickly. Add them for me. Yes, revenue, total revenue.
1222015.
Okay, expenses.
1067528.
Please subtract, you get a surplus because the revenue is bigger than the expense. So please subtract the expense from the revenue. Let's get a surplus. Please subtract this from this. What do you get?
One 54487.
Uh,
154487. Go straight to the balance sheet. Go straight to the balance sheet. Go to surplus. 185447. Right? Number. Oh, 154 rather. Hey. 154487. 154487. Okay, good. You see where I brought it? I came to add it to the what? The accumulated fund in here. And it is not a deficit. So kindly cancel the deficit. So I've left it as surplus. If it was surplus to, I would have cancelled it. If it was a deficit, I would have cancelled the surplus. I'm done. At this point, I can stop work. Okay? At this point, I can stop work without balancing the balance sheet because I know it will not balance. I'm not interested in the balancing. I'm interested in passing rightful entries. Or if I were you, what I'll do is that I'll add total assets. So total assets should be equal to current liability, non-current liability, and accumulated fund. So let's quickly add them. Please add all of them fast, because of time. Quickly. We are all going to work. Quickly add all of them fast. Yes, I finish. Oh, no one is adding.
177,500.
Add this ones too.
Hey. 161.
161. Yes.
023.
So this plus this is equal to total asset. So total asset is equal to what? This. You see, I'm supposed to leave one line here. Then I write total asset below. Then I write the total number there. But because of this, I'm economizing it. So please give me the total. This plus this is equal to total asset. That's current asset, non-current asset. How much?
The current asset figure, I think, is wrong. Please.
So I'm getting. So the total for the current asset.
What did you get?
I'm getting 76,140.
Sure.
You see. Is it correct, please?
Sure.
76,140.
Yes.
Please add this 76 to this 177,500. What's another person is adding the liability?
So it's 253 640. Let's go to that.
Total assets. Please now add all this for me. Current liability, non-current liability, accumulated fund and surplus. Add everything. We don't have time. If you had time, you have to add total current assets. Then you write the answer here. Then, of course, non-current asset is 5. It's still the same 0. Total non-current asset. Total current asset. Then accumulated fund. You understand it? But because we don't have time, just add all for me right now. Add everything. So everything you're supposed to get 153 640. So you have question 2 on the note that I provided on the classroom page. Kindly go and solve it. Okay. Remember, don't kill yourself. Okay. Just understand them. What did you get? Final answer. Do you get 253 640? If not, go back again and resolve everything again with the knowledge you have gotten. Resolve everything again, and the values, add them more. Or if you can go back and add them more. I don't believe the figures you gave me. So add them very well, and you're supposed to get the same thing. But what did you get? Just tell me what you had first.
Let's scroll down some more.
Or maybe you are sound. I think there we are entering into a different territory. You are supposed to get this amount. Come again.
The sheet.
The calculated fund. Is it 70,870?
Is it 70,870? Now, Nicholas, I see in here. You are talking as if you're yes, it's 70,870. 70,870. Are you okay?
Yes,
oh, just
please.
that 20 and 50 is 750, 800, 1793, 45, 400, 13970, 96, 760, 975, 330, 70, 870, 154, 4, it's add them for me. I want to show you something before you close. What did you get? Hey, we have over 40 students and 40 students are adding this thing. And you see why I'll be bringing my figures. Next time I'll bring my total figures as well. So I didn't bring my total figures.
Tell me I'm getting 462,160.
462,000.
160.
Yes. 160.
Yes, please.
Good. Perfect. This was. Just mention what you had. What did you get, please?
462, 210.
You had 410.
462,200.
This should tell you that everybody is mentioning his or her own figures. You understand? So even the same figures, more adding it differently. So please go back and add everything well, or do it the work again. Do you understand it? Do the work again, and this time around, add them well with the knowledge you have obtained. I believe you understand. Yes. But in all said and done, the focus shouldn't be on the balancing. That's why I keep telling you that. In fact, when you get here, just write total assets. The answer you get for total assets. Come and put the same answer at what? The total of liabilities and what? Accumulated fund and surplus. Just come and put the same answer here. Why? Because don't waste your time and go add. If you go add and they don't balance, psychologically, it will have an impact on you. Like our sister, she got the answer. She was scared to mention it because she said it has no balance, so she's not feeling secured. No. Just go ahead.
My total asset is 253,640.
You had 253,640.
Yes, please.
It's like that.
640.
253,640.
So it's balanced.
Yeah.
So those mentioned the 400 when your figures different. Those mentioned the 400 when your figures different. You don't add the 75 to it too.
I'm sure they added all.
We added 70 something thousand. Sorry.
No, you just add this one. We pay. Who's that? It is current liability, non-current liability, and accumulated fund. This is what you add. You add only this one.
Leave it out.
So it's balance, Me definitely that's balance. I'm not scared about the balance. I'm interested in the. Please, I'm not interested in the balance. No, I'm interested in the what? In the empties. But anyway, it's balanced, which is very important.
In the ticks. I'll be interested in the ticks.
Perfect. And the tips, no, it comes from the trial balance. Once you post all trial balance entries, please listen. Once you post all the trial balance entries very correctly, please listen. Once you post all the trial balance entries very correctly, you have gotten like 50% of the text already. Once you post all the trial balance entries correctly, some are going to balance sheet. Please pay attention. Please pay attention. Some are going to balance sheet. Some are going to statement of financial performance. Once you post them correctly, you have gotten like 50% of the text. Then the next one, come to the footnote. Today, what have we learned from the footnote? Already, we knew about the inventory. So this one, we already knew it. Now, advances, we have learned advances. That we have learned that the advance, no, you either be receiving it or you be paying it. Whatever the case, no, you have to subtract it from the statement of financial performance. If it is advance in quantity, subtract it from the workings or the statement of financial performance. Go and subtract it once it is an advance. If it is owing, go and add it. If it is advance, subtract it. Did we learn that? Yes, we learned that. Now, if the advance, no, you are the one that paid. It is the local assembly that paid the advance. That one, no, it is a current asset. If it's the local government or the entity that paid the advance, it is a current asset. If we are the one that that received the advance, we didn't pay, but we received it, it becomes a current liability. Note this one too. It's very key. So on advance, no, you subtract it first from the statement of financial performance or the workings. Go and subtract it. Then it will go to the balance sheet as a current asset or a current liability. That is, if we are the one that paid, it will be a current asset. If we received it, it will be a current what? Liability. Because we receive it, you have to pay it back. Then we go to salaries. This one too, there's an advance and owing, which is okay. Then we have work in progress. Now the work in progress. Now I was saying that the work in progress, there are two things involved. You understand it? They made a mistake and treated the 2,000 as a work in progress. So we have to subtract it. Now, when you subtract it, because they didn't add it to the PPE schedule, we have to go and add it to the PPE schedule. And I'm saying that this one, it could vary. Read the question well. If the question tells you that they have already treated it as part of the PPE, then that one, don't go and add it to the PPE schedule again. Then subtract it. But the question doesn't make mention that they have already treated it as part of the PPE. Then you have to go add it to the PPE schedule. And they said there was an additional expenditure of what? 800. And I said, this 800, you have to capitalize it. And you don't send it to what? The statement of financial performance. That's what I wanted to make clear. You don't send this one to the statement of financial performance because it is not a statement of financial performance item. You have capitalized it, hence you can't expense it. You have capitalized it, you can't expense it again. So please don't say that everything there, one has to go to statement of performance, one has to go to statement of financial position. It's not every item. Consider the item. This is an asset. And don't send it to the statement of financial performance. Like others were saying that you send to how do you call it? Other expenses, others are saying you send it to goods and services. No, you don't send it to them. You just capitalize it. And because they said that what the expense has not yet been paid. So you have to pay it. And when you are paid, you have to pay cash. But remember, this is accrual concept. So because accrual concept, you send to current liability. You understand it? They've not paid it. So send to current liability. It means you are owing. You are owing. So send to current liability. We are done. Then when you go to the interest, on the interest portion, yes, we have already treated the interest as a what? So we have already treated the interest on the trial balance. But ask yourself that the interest on the trial balance now, is it a full amount they gave out? Is the interest in the trial balance the full amount of interest we are supposed to pay? If it's a full amount, fine. But usually it's not a full amount. So you have to go and calculate the interest on the loan. You have to go and calculate the interest on what? The loan. After you calculate the interest on the loan, then come and compare it to what is in the trial balance. The difference, you add the difference to the interest amount. Add the difference to the interest amount if it's a loan. Add the difference to the interest amount. If it's a loan, you send to a current liability because you are owing it. You've not paid it. The difference, no, send it to the current liability. If it is interest received, go and add it to what? The difference, go and add it to IGF and send it to what? Current assets, because we are expecting to receive it. So send to current assets. We are done. This is all what you have done. But it is the calculation that delayed us. Add it for me, subtract it for me. Good. Now, this is an ICA pass question. This is an ICA pass question, and hence I would like to share the results with you and teach you something. This is an ICA pass question. This is an ICA pass question. It came in 2023 March 2023. So follow me. So follow me. Let's do it together. ICA Ghana. March 2023. PSA. March 2023. I want to show you something. March, always it is question 2. Question 2. Any. Oh, yeah, Ben. Oh, I chose March 2024. It's rather March 2023. Okay, so let's go to March 2023. I want to choose a different year. March 2023. March 2023. So March 2023. Some of you have never visited ICA platform before. And you, question 2. Go straight to question 2. Any. Insulta appear Chrome Municipal Assembly. Okay, good. So this is a question, as you can see. As you can see, this is a question. Now, this is what I want to show you. Go straight to the PP schedule. Question 2. Please do question 2. Look at something. We balanced it with what amount? Look at the balance they had. Look at the balance they had. What did the balance they get? They got 462,210. This is what they balanced it with. We also balanced it. But we didn't balance it with 462,210. We balanced it with what? 253. You remember? We balanced it with what? 253. That's why I keep telling you that the focus shouldn't be about what? Balancing it. See our balance figure. That's why I keep telling you that some of you have to take your time. You don't have to be rushing. Small. You get it. Look at the balancing figure. 253,640. 253,640. This is the balancing figure. This is what we use to balance it. We have balanced it. ICA to look at the marking scheme, the balancing figure. Share. Look at the balancing figure. This is what we balance it with. 253,640. Can you see that? This is what we balanced it with. 253,640. So the focus shouldn't be about balancing. You can balance it and still get it wrong. You can balance it and still get it wrong. Said the focus shouldn't be about what? Balancing. You see the balancing figure that we got, and look at what ICA got. ICA balanced it with what? 462, 210. 462 is what ICA balanced it with. Can you see the difference? 462, but we balance it what? 253. But ICA balance it 462. So the focus should be about what? Balancing. But then we all had the same statement of financial performance. We all had the same surplus. Look at the surplus. 154,487. We all got the same thing. For a statement of financial performance, we all got the same thing. But when it came to this one, we all balanced it with a different figure. Do you know why? Let me tell you why. I see it's wrong. Let me tell you why. Because just do the simple things and go your way. Let me tell you why. See the PPE schedule. Can you see the PPE schedule? This is why the balancing figures are wrong, are different. ICA treated the cost. They came straight to accumulated depreciation. You see, the 2,000 and the 800, ICA didn't treat it. They didn't treat it. So for ICA, they assume that they have already captured it. For ICA, they assume that the 2,000 and the 800 has already been captured as part of the PPE. So no need for them to add it again. But we also assume that ICA has not already captured it. So you have to add it. But what I say, we assume that ICA has not captured it. That's why I was trying to explain to you. You see, when a gentleman said that the payables not treated it, no, I wanted to take time and explain that part to you. Okay? But yet that some of you are into moving too much. So this is why the balancing figures are wrong. So let's assume that you did yours and ICA is marking it again, this marking scheme. You get everything correct. You get all this correct. You get this correct. You get this correct. Because see, who's the winner pay? Depreciation for the year, no, the same thing. It's only the final answers you will get wrong. The final answers you get wrong. But getting the final answers wrong wouldn't warrant that you get like 70/20. Please understand it. It's only the final answers you get wrong. And then when you go to payable, you get wrong. If you get that particular 800 that you send to payable, no, you send to current liability wrong, it does not necessarily mean that you are going to fail. No, you not fail. Because if you get wrong, do not add it to the text. You getting wrong is not the problem. Just that if you get wrong, the wrong will not be counted. But when you get tick, it's a tick the accounting. So what I'm trying to tell you is that the thing is not difficult. Sometimes after ICA has come out with this marking scheme, then the people going to mark, they'll raise this one, an objection. They'll tell ICA that ICA, you've made a mistake with your marking scheme. And they'll say, why have you made a mistake? They'll say that you didn't include the 2,000 and the 800, but yet still you have calculated depreciation on the 2,800. You see, 28, do you remember? This is depreciation. If for the 2,000 and the 800. So if you didn't include it as a new addition, why have you included the depreciation? That is why ICA made a mistake with the marking scheme. They're supposed to include the 2,800 because if it has already been captured, then the accumulated depreciation here, the depreciation for the year, which is this one, should have catered for it. Once you bring additional depreciation, it means that you have introduced additional assets. And the question is, where are the additional assets? But that's here. That is why ICA made a mistake with that. They are supposed to include the additional assets, but they didn't include it. So this particular question, ICA marking scheme, no, wrong. They're not supposed to. They were supposed to include the 2,000 and the 800. This is what I wanted to show you, the marking scheme. Do you get it? This is what I wanted to show you. Okay. So therefore, going forward, no, just do the basic things. Once there's an asset, or once there's a mistake, in an asset, go and add it to the PPE schedule, and you get it correct. You understand? Whatever being the case, the focus shouldn't be about balancing. The focus should be about making rightful entries. When you finish, you are done. No matter what, you are getting your marks. So this will bring us to the end of local government, God willing, on Thursday, you do covered entity. Okay, then this week we'll finish preparation of financial statement for this week. You understand? God willing, next week we'll take a different topic and we'll finish. Okay, good. So, Madam Dufie, you want to ask a question? Can you ask a question? I'm unmuting you. Madam Dufie Patricia, can you ask a question?
Hello, sir.
Yes, can be.
Yes. Please, so sorry for taking you back, but then the interest on loans to staff, my network was giving me issues, so I want you to go over it
Okay,
again.
please. Yes, no problem. No problem.
Thank
So
you.
please, who else is having a question? Apart from that, we've closed. Please, we've closed. You can now. I'll put the recorded video on the Telegram page, okay, so that you can have access to it. But then we've closed. So I'll now have attention for 1 or 2 people. So, Madam Patricia, let me take you back. So, like I was saying, okay, the interest on loan to staff. When you see, anytime you see a footnote like this, talking about interest percentage, it's trying to tell you that the interest we paid or the interest we received, it's not up to the interest we are supposed to pay, or it's not up to the interest we are supposed to receive. We are supposed to pay more, or we are supposed to receive more interest. That should be the first now will come in mind. Please understand it. Because you see, accrual concept is saying that whenever you have interest to pay, capture the entire interest. That's accrual concept too. Whenever you have interest to pay, capture the entire interest on your financial statement. Don't capture only the interest you pay. But the trial balance will give you only the interest you pay. And meaning that the interest on the trial balance is not up to the interest you are supposed to pay. So therefore, you have to compute the total interest you are supposed to pay or the total interest you are supposed to receive. Patriotas here. Good. So looking at this question, okay, we have 2 interests. We have 2 interests. One is
Yes,
what?
please.
At the debit side, one is at the credit side. You know that the one on the debit side is an expense. Do you know that? And the one on the credit side is what?
Yes,
Is the
please.
public, is a revenue to us.
Exactly.
And it will go to IGF, true of us.
True.
True. Good. So look at footnote. I'm saying interest on loans to staff is at the rate of 15% per annum. Interest on loan to staff is at the rate of what? 50% per annum. It means that we are supposed to receive interest of 15% because we give the loans to the staff. Hence, the staff are supposed to pay us interest of 15%. Okay. So therefore,
Yes.
multiply 15% by the loan to staff or advances to staff. So what is the advances to staff amount?
20,700.
Perfect. So 15% of 20,700 is what?
3,105.
3,105. Is it like this?
Yes. Yes, please.
So this is the amount we are supposed to pay as interest. But how much interest did we pay? Or this is the amount of interest you are supposed to receive from the staff. But how much interest did we receive? We received only 1,050. Meaning we have not captured the entire interest you are supposed to receive. So accrual concept is saying that capture the entire interest, and the ones that you are yet to receive, send it to receivable or send to current assets. Do you get it? The amount of interest we are expected to, that amount to send to receivable. This is the one that we have captured. It means this is the one we actually received. But it's not the one we received is what you are supposed to write. You are supposed to record the one that we are expected to receive. So the difference, this amount, plus what amount will give you 3,105?
2,055.
Perfect. So that 2,055, first of all, add it to IGF. So go straight to IGF and add it to IGF. So when you add it to IGF, it means that interest, this plus this plus this is equal to 3,105. That's you've now captured the appropriate interest that you are supposed to receive. That's accrual concept. Interest are supposed to receive. Write the amount, the full amount there, not part. So if they give you part, you have to find the difference and need the difference. Are you okay?
Yes, please.
Then this 205 now, have you received it? Have we received it?
No.
Have we actually received it? No. We are expecting to receive it. So go to balance sheet and add it to current assets. It's an asset to us. So put it under what? Current asset, receivable, 205 in here. Interest on advance in here. Are you okay?
Yes, please. Thank you.
Perfect. And another one, you see, there are two. We have another interest. Interest payable. This one. Interest expense. It means interest we are expected to pay. The question is it a real amount that we are expected to pay, or we are expected to pay more? So the question is saying that what? Interest payable is 10% on long-term loan. Interest payable is on long-term loan, okay?
Yes, please.
Yes. On long-term loan is at the rate of what? 10%. Interest on long-term loan is at the rate of 10%. So look for long-term loan. Did a long-term loan. This amount is a long-term loan. So this long-term loan times 10%. It's got to 5733. You understand it? This is the amount you are supposed to pay. But how much are we paying? We are paying 5740. So what it means is that go to public debt. Add the difference to public debt interest. So when you go to public debt interest, what do you see? You see that we have recorded 5740. This is the amount we actually paid. But this is not what you are supposed to record. You are supposed to record the full of it. So add this one. Add interest owing 1793 and record this one as interest payable. Then the difference, send it to current liability as what? Owing. In here. Current liability as owing. In here. In here. 1793. Owing, interest owing 1793. Please, are you okay?
Yes, please. Thank you.
Perfect. You're welcome. So
Yeah,
that's
make
that.
sure.
Amen. Good.
One more
So this
thing.
okay.
Please, what's the name in is it Telegram or something?
The name of the Telegram, you cannot find it unless I add you or I send you the link.
Please kindly, thank you.
It's a private page. It's a private page. So unless you join via the link, do you get it?
Okay.
Sir,
Just that.
please, I'm confused somewhere. Kindly help me out.
Okay, feel free.
Most of the non-financial assets we post to current, non-current assets. But so it confuses me with financial assets. This time we posted it to IGF. So I want a little clarification on it, please.
Unless you give me the specifics, so because I don't see financial asset anyway. Okay.
Yeah.
I see what you're talking about. Wait. Interest on loan. Interest on loan / financial assets. Interest on loan / financial assets. Yeah, this one. Actually, this is the interest on loan. Do you understand it? This is the interest on loan. So I'm asking you. They are saying that the interest on loan is a financial asset to us, and this is true. The interest you are receiving is a financial asset to us. Please, there are different types of financial assets. Okay, you have to identify that particular financial asset and weigh it and see, is it long term or short term? Patricia here.
Okay, where are interest on financial assets? Oh, okay.
You understand it? The interest. So this one, that it's a short term. Okay, advance interest is a short term.
Yeah.
But equity.
Today I say okay. So okay.
Perfect.
I thought it was financial assets alone. Okay, thank you.
Sure. But it's not a big deal, anyways. It's so simple.
Thank you.
Grateful. Thank you. Yes, I believe we are good then, right? I have to be at work at 7 o'clock, so I have to perform magic. Don't worry, we'll get there. So good. I think you are done, right? So please just take your time and go through the question and try to balance it yourself. But then, if you're able to get about 50% of the 70% of the footnotes correct, and you are having issue with 2 or 3, you are good to go. Even I see when you were doing it, they had an issue with the PP schedule. Charlie, sometimes even I see themselves, they had an issue with the PP schedule. Okay. So it's normal that you're not able to do everything. Do you get it?
Hello.
Yes, Madam Naomi.
Sir, please kindly send the Telegram link in the group. Okay, I beg.
I'll resend it. Okay. Thank you very much. I'll resend it right now. So the video will drop later in the day. Yeah. Draw later in the day. Thank you very much. So please, we'll meet, God willing, Thursday. Bye-bye.
Thank you, sir. Bye-bye.
Thank you. You're welcome.